Yes, this is Side Talk. I'm here with a panel of journalists to discuss the just announced performance of the National Security Fund for the year 2020-21. With me, Muhereza Chamtetera, Ruth Adong, and Raymond Mujuni. But just very quickly, what was your feelings about the results that the MD, Richard Byarugaba, announced earlier today?
Okay, for the start, I mean, maybe one thing I should also say, I'm both a journalist, but also I save with the fund. And so I'm very interested in terms of what happens to my money. So of course, seeing most of the fundamentals being announced, double-digit growth, especially at a time when we're just emerging from the pandemic. And I know that the economy has been growing at about 3-4%. So seeing double-digit growth across many, of the fundamentals of the fund, I think to me that's interesting. And I cannot wait to see what happens when they announce the interest rate next week.
Ruth, what's your feeling?
So for me, I think one of the biggest things that I saw was member contribution growth. Albeit the fact that it's about 8%, it's important that even when we've been through 2 lockdowns and the economy is giving very little figures for economic growth, we're still able to see an increase in contributions. Very many of us expected it would have been the reverse, right? Because we have sectors that have not opened, sectors that have opened and then been through multiple lockdowns, right? So it's good to see that we are still delivering contributor growth.
Raymond, what's your feeling?
So it would have been a regular performance, but what makes it spectacular is the kind of environment that it's been delivered in. Remember, it's beautiful to look at the performance, but NSSF exists specifically to collect, keep, invest, and then pay out members their benefits. And I think that what we're seeing from the trend of results they've given us is that they've been able to collect a little bit more than what they were collecting, 8% more. They've been able to pay out more benefits, almost 685 billion, and also the assets under their management are growing, which means they're investing wisely. So it should have been a regular performance, but delivering that performance in the COVID-19 era, but also in an era where you're obsessively being harangued by legislators for an amendment, it's really impressive for them to do that.
Let me come to you, Cham, again. Let me come back to you, Cham.
Yes.
They gave us a breakdown of the asset classes.
Yes.
And again, it continues to endure, despite the attempts to reduce the imbalance, that 78% of the assets are in fixed income.
Yeah.
Somebody might argue this is not rocket science. Just put everything there and you get the returns. Is it as easy as that?
Okay, well, of course, I don't think it's easy because it involves a lot of, involves a lot of balancing. Because if it was easy, I would imagine everybody would be doing it. But I think at the back end of it, there's something that people maybe would love, especially the people who have just joined, journalism or have just joined NSSF, would love to forget. I love to joke that the current management at NSSF, they are the guys who turned the security element in national social security, because there used to be a time when almost every month there was a scandal in NSSF. That was around 2003 when I used to, started reporting in the Daily Monitor. So I think we've kind of crossed over from that. Now there's more. I think when we come here, and you could even hear from the kind of questions people are asking. People wanted to know more about how is the money growing, rather than, who did that. So I think to me, that's one of the greatest things that do come out, because most times we look at the money and we say that's rocket science, but you see behind it all, there's the people, and what kind of people do you have, the kind of integrity that is involved in making all these decisions. So I think to me, that's one of the most interesting things. But of course, like I always urged as an NSSF member, I think beyond the money, and thank God it was addressed in terms of the upcoming reforms, I would love to see beyond the money, I would love to see NSSF doing a little bit more in terms of beyond giving me interest, things like education, medical, insurance, because at the end of the day, we have to be educated, we have to improve our skills, we have to be healthy to be able to enjoy this money. So I'm happy that in terms of the reforms that are going to come up, a couple of the things I would have been interested in terms of where NSSF should be investing, being addressed. But yes, I think so far so good.
Ruth, Cham talks about a change in the perception in the fund, a more positive perception of the fund, and nothing better shows that contributions continue to grow. That means people, they might not say it, they might not shout from the rooftops, but they continue to put their money in the thing. Do you think that it could be more, actually, because it grew actually by 8% last year, 1.37 trillion from 1.2 the previous year? In our context, is that a laudable increase, or what do you think?
I think it's like Raymond says, right? The times that we are in, to register a growth itself is a really, really big thing, right? But then also to know that despite the fact that we are looking for, like, people are out of their jobs, or those who are like have the opportunity to take out their money are holding back and saying, no, let my money grow. That says a lot, right? It means people are finding security in where their money is going and how it's being invested, right? And you hope that, like he was saying also as well, that you hope that when you get your money, NSSF is going to help you beyond the money. So after I have received my money, what else, right? Are they teaching me how to invest it right? Are they teaching me how to grow it beyond after because there was a report that said after 2 years when people get out their money, it's gone, it's finished, right? So from, like he said, beyond the 2 years when people have picked their money, have you equipped people enough to be able to use it beyond use it, like have longevity for the money that is saved with NSSF? Because the trust is there. I am saving NSSF. Good. When I get my money, is there a plan for after I've gotten my money? I think that's where the issue is for me.
I think we shall come back to that because we have interesting perspective. But I want to come to you, Raymond. One of the interesting things Mr. Byarugaba said, the managing director of NSSF, is that the fund has reached maturity. That now they are making more money in income than members are contributing, which shows that you have crossed a certain thing into maturity. Is it a surprise? Is it a surprise at all?
Maybe
this is just momentum.
No, maybe not.
Anyway.
So the two things that I'd like to credit NSSF for is it's easy to be comfortable because it's compulsory for people to save with NSSF. So there are things that make it easy for you to be comfortable. One, it's compulsory to save with NSSF when you hit a certain margin. Two, the kind of money that you're working with is voluminous, so you could walk into any market and be a big player. You walk into a Kenyan market, Rwandan market, you're a big player, and you can invest it and get a return on it. But even on the markers, for example, voluntary contributions, where people don't have to save with NSSF, but they're saving, they're doing well on that. So it's easy to forget that even despite the fact that there's compulsory saving schemes and the like, NSSF is doing a lot more than that. What, however, I'd love to see is now the latitude. They've done well. Now we've hit what you'd call maturity, peak maturity rate. So can we now see latitude on people, what people can do with their savings? I'm not going to be 55 anytime soon, and yet I have money with NSSF.
Lucky man.
I have money that I see with NSSF, and I'm wondering, there's a housing option here, there's a school option here, there's these options here. So what can we do with that? And as just working the numbers, if the money that they pay to the patients, COVID-19, 60 patients, if you give them 2 billion shillings, that's about 33 million shillings each. 2 flight tickets to Maldives, that money is gone. It's gone. So there has to be more latitude on what pensioners can do with the money that they...
But that will come with the law, isn't it? Because right now they're working within the law, which doesn't give them much latitude.
Yeah.
And let me just stay with you about the law, the new act that is causing... causing heart attacks all over the streets. What do you think about this? 20%, we all focus on the 20% midterm access. Do you think it's a good thing? Maybe we should just be forced as before to just keep our money here, because the benefits of leaving that money in are much what do you call it?
They overwhelm.
Overseed. Taking the money out now.
So for the law, honestly, there are two things to consider, and both NSSF and the people asking for the law, each of them have valid points. One of the valid points is that the life expectancy rate in Uganda is at 63 years. So you really have to consider how
69.
how long are people going to spend with their pension after they've saved all their lives. But the more valid point from NSSF is if you have a run on the bank scenario on the fund, you affect the pensions of other people. If 6 chums come to take their money out, then Raymond's money also gets affected. So, and that it was important to hear both their validities and then address them. And I think that what we see with the amended law now is that with the removal of those clauses, like Richard says, it means that now NSSF can now start to look at the positives in the law. They start to see the threats in the law and address them. But previously, the way it was structured is you were going to have to pay out 6 trillion shillings immediately the law came into force. and nobody has that kind of money in cash, even if you run on Stanbic Bank at the moment.
But that's an interesting comment as well. Let me come to you, Cham. When Richard was talking during the press conference, he said that in the new law as it's structured, we've only focused on the 20% midterm access. But there's all things about increasing the number of people who will come into the threshold. For example, under the current law, it's if you're a company and you have 5 or more, you're mandated to do it now. It doesn't matter if you employ one person, you should be in the thing. They bring in the informal sector, and they're bringing other things. So essentially, even this 20 midterm access might not shake the NSSF too much.
Yeah, actually, I think if you look at the potential of the fund, especially as enshrined in the reforms that are coming, I think that may not shake it much. I don't think this is, people got excited because, I mean, we've never gotten a pandemic of this kind of thing, and for a moment, I have never appreciated, going to bed and waking up alive, but we always took it for granted, like you sleep and wake up alive, but, for a moment, I think so to me, that kind of excitement that came in the market was because of, people were not sure what was happening, and of course, there are all sorts of, people were projecting there's going to be a lot of gloom, but I think as more and more people learn to live with the pandemic and figure out a way around it, and as more and more, of course, the vaccinations do take place, I think people are kind of tried and stabilized, and I think I even foresee a scenario that even when they actually ask people to go and pick their money, there are those who qualify that will actually not go for it. Yeah, but I think, like you say, and like Richard has really assured us, I see the fund is going to be more stable, and I think it is important that we understand that the more stable the fund it is, the more stable the fund is, the more it is able to to make more money for us, and of course I know that, and like Raymond has hinted at it, I mean, there has to be economies of scale, because if you're talking about being a 15 trillion, trillion fund, you should be doing a lot more. Of course, we appreciate that they've been constrained by the law, but now that the law is opening up, we should certainly be expecting to see more. And if at all I'm invited for the next year's event, I would be interested to see, because for a long time I know that the fund has been constrained by what you can do and what you can't do. Even when there's a very good opportunity next door, you can't do it because you need to go through. And I remember, you remember the issues of, you shouldn't have invested in Umeme. People were more focused around, did you follow the law rather than did you actually make money? So I think, to me, it has been a good run, for the last like 10 or so years. It will be interesting to see if this is something that can be continued, after the reforms have been made. And I'm only asking the president to make sure these reforms do come very quickly, because at the end of the day, in the money markets, a lot of things can happen. Yeah. So this is not something we should be sleeping over, because NSSF the reforms have been happening for the last 10 years. I mean, it's just too painfully slow. I think, to me, the president should 1 month, let him sign, and let these guys run to market and make us some money.
True. Well, it is a bit more complicated than that. It has to go to cabinet, then cabinet has to assent, then it comes to parliament, then parliament, then it goes back to the president and sign. But anyway, you're right. Yeah. There's no reason. We already know the gist of the thing. Yeah. It's only a few clauses that have to be shifted around.
But I mean, if you look at it competitively, as a body corporate, NSSF is competing with other people that have money. Yeah. Stanbic Bank doesn't have to wait 10 years for an amendment. Just the board sits and they sign off, and they're in the market, they're playing. So the question then is, how do you compete when you have all these regulations around you? I think even when we amend the law, we have to be alert to the fact that they're competing in a market where they need to be able to make quick decisions. Yeah.
Let me open this up a bit, because I don't want to put anyone on the spot. The way I think, I'm also like Cham, I'm always looking at my phone and checking whether my money is still there, or just a scenario it goes up. But I've worked out that if NSSF pays us 10% every year, my money will double every 7 years. That's my calculation. It's simple mathematics. But the problem I see is that at the time of collecting my money, and I think it's a statistic NSSF can confirm, it's a statistic you can find with most people. Very few people have enough money to sustain themselves for more than 4 years. On the current, if you take your annual salary and divide it by what you have in NSSF, you don't get past 4 years. But people don't know that. But when you have this huge bulk, I think you own. What would you like to see NSSF do to help these people? You mentioned earlier that, within 2 years, 80% of these people have cleaned out, or not cleaned out their money, but they really don't have it anymore in liquid. What would you like to see NSSF do to help the members? It's also nice to give you the money to go.
I don't know. So for me, the thing is, everyone has an idea about what they want their pension life to look like.
Their retirement life.
Yeah. What you need to do maybe is to impress them, to start to build a kind of social change and behavior change in people that are saving with the fund. It's beautiful when NSSF sends us that message that says, this is how much money you have. But it would be more beautiful to say, this is how much money you have, and these are the places where that money can go if you'd like to grow it. Because every time that message comes, I get closer to receiving my money. So if you have to engineer behavior change, you have to do it now. So that when people get their money, they have a little bit more latitude. And it can even be in places where NSSF already has investments, so that these people just act as a buffer to NSSF or as an addition to where NSSF is investing their money in.
Ruth, do you have any thoughts?
So I've been privileged enough to attend one of the financial literacy classes organized by NSSF, where they tell you the issue is with many Ugandans, by the time they're retiring, some people are still paying school fees. Some people are, want to start building projects. You want to stay in your own house. And some of those are some of the things that people need to start addressing earlier, right? Do you, as you are working now, are you putting aside another fund that is going to cater for school fees? Are you putting another fund? Are you saving outside your pension, right? So that you're able to cater for this house that you want while you're working. You are also paying school fees while you're working, so that when you retire, you have something that you can bank on, right? Because we Africans have this thing of, I have taken care of the children, and they will take care of me, right? But as we are all seeing, things are shifting, right? Millennials and Gen Zs are like, no, you didn't give back to me for me to take care of you, right? So take care of your own business. So I think it's important that NSSF opens avenues or teaches people more sensitization on saving outside the fund, saving so that, you're able to handle everything that you need to handle now, so that your pension can serve the purpose it's supposed to serve.
Or on the other hand, because you now have a voluntary arm, you can save more with us.
That's very
since
true.
we have the best rates in town, in the business and thing. But let me not preempt.
Okay, there's this joke that you begin dying the day you're born. I think you begin retiring the day you start working. And that's why I've been, and those who've been following me, I've been consistently saying, yes, NSSF is doing good. Of course, previously they were being encumbered by the law, but now that the law has opened up, we need to see a lot more innovation, because at the end of the day, I don't have to wait for to reach 55 to live a better life that NSSF is promising us. Good enough, NSSF is saying they are going to come in with more and more products like education, because you see, if I can be able to get, say, education products and I build my capacity, so instead of retiring with 1 degree, I retire with more skills, then that means even after I've retired, like formally, I can still be able to work. So if NSSF can guarantee a mortgage for me, and then I buy a house, and because there's an NSSF guarantee because of my savings, I can be able to negotiate maybe 4% or 5% less. So the risk, the interest rates, so the interest rates can come down. So if I buy a house today and I retired like 30 years, this house will have grown maybe in value by, say over 10 times or whatever. So I will retire with an asset here, maybe with a PhD, and then I still also have my money. So that will, even when I retire, I can actually be able to retire in the actual sense of the better life that I'm being promised. So NSSF, me as a member, I really am looking forward to the post reforms, so and all these nice things we've been promised, I can't wait to have them.
Just one other thing, 150,000 new members were brought on to the roll this year, in the last financial year. I think we have NSSF has active members of about 2 million or thereabouts, between 1 and 2 million. 150,000, is that something also to celebrate, or are you telling your friends to be on NSSF?
We forget that we're in a pandemic where business is actually shutting down.
Actually, the best time to start saving is when you're in trouble.
Exactly.
So people should be saving more now than before.
So if businesses are shutting and people are looking for actual cash to be able to pay for food, cash to be able to pay for medicine and things like that, and you still have a registered growth in the numbers of people who are saving, I think it's a positive, it's a plus. Would have expected way less, but this is a major plus for them. It could also be an indicator of what is in the economy at the moment. Maybe the economy is growing for some people.
The target for NSSF, the self-imposed target for NSSF, is that they should have 20 trillion shillings in assets by 2025. They're now at 15.5 trillion. Do you think they're going to make it in 4 years? They've got to add another 4.5 trillion.
I think it should be achievable, especially given the reforms that are coming up, and of course, like they've said, the money, they begin to see more growth from the income, and looking at the numbers, I think it's something that should be achievable, unless of course 2 years ago nobody expected what the pandemic is going to be and all that kind of stuff. I remember we have things like, oil and gas. We are told it's going to unlock lots and lots of opportunities. So really, this should be something that is achievable, unless, God forbid, a calamity happens or whatever. But I think it should be achievable, and looking at the previous rates that they've been growing at. And also in terms of the stability, in terms of, leadership and governance, if that is maintained, I think we should be able to see the growth happening.
But now we think it can happen. But when they set the target in 2015, we thought these guys are smoking something very potent, because they were under double digits at the time.
Yeah.
They were under 10 trillion in assets when they made the goal.
Yeah.
They set the goal.
Markets can't just be tamed by our opinions. Yeah. There are so many other things that influence markets. We could predict that 4 trillion is something that you can achieve, but what if what happened in Kenya, which is a cap on interest rate, happens here? If you cap interest rate, then the money that NSF has in institutional savings and the like could go away. So we can't predict the kind of markets, but what we see now, if NSF still has its growth predestined on assets and on income from those assets, I think they're doing amazing at the moment. It would take something of a major calamity for them to fail. Yeah, it's the equivalent. Yeah, it's the equivalent of Cheptegei on the racetrack. He's going to win the gold, but a calamity could happen. He could sprain his knee or something. But unless NSF sprains a knee, we expect them to get to the finish line.
To that. Yeah. So maybe they set their target too low. Us who are on the outside, we don't know.
I think it's realistic to set a target like that, because especially at that time, they were yet, the laws yet to be amended, but now we're closer to seeing, this law coming into play, a diversification of products, but also opening up the informal sector to saving as well. So it's very, very possible for them to see the vision and get there, because of all these things the law will open up for them.
We're going to take a break right now, and when we come back, we shall reveal what the interest rate will be next week.
In these unprecedented times, I need a partner that is there for me during the good days and the difficult ones. Who gives me a second chance in life?
Offers me guidance to make smarter and wiser financial decisions.
Who supports me move my ideas from ambition to achievement.
Who listens and understands my business.
A partner who is committed to the safety and growth of my savings and ensures a reasonable return on my savings.
My invaluable partner is NSSF.
Together, we rise against all odds
to make tomorrow better.
Join us for the 9th virtual annual members meeting happening 29th September 2021, starting at 9 a.m. live on TV and online. NSSF, a better life.
Yeah, we're back from the break. This is Side Talk, gathering of a few journalists who are at a press conference to announce the performance of the NSSF financial year 2020-2021. We've been discussing the results, but we're coming in for one last question. I want to put it to all of you guys. Last year, NSSF gave us 10.75% interest. The previous year, it was about 11.5%. Around the table, what do you think, Cham? What are we getting, and why do you think we'd get that?
Okay, maybe
please tell me 20%.
Okay, I think really, given what has happened, what they paid us last year, and looking at the trends, I wouldn't be surprised if it was in the range of 10%, plus or minus 1. And why do I think so? I'm one of those guys who, okay, maybe because I've read too much. But I tend to think a lot of beyond the numbers, because you see, you need to look at the present numbers and then look at what is happening in the business that can guarantee those numbers can be sustained or they can actually get better. And there's something they talk of being a sustainable business. See, being a sustainable business, you look beyond the present numbers, which is about how well you're deploying your current assets to get the best returns. And if you look at the fund, it's growing and everything else. But as you look at other things like, do you have a clear vision around which you're getting your stakeholders around? And I think, to me, the vision of NSSF has always been clear, getting to 20 trillion shillings. And I think everybody keeps on thinking around that. There are things like, do you have great people? Do you have, of course, great management, ethics and integrity? Are you a good player in the community? I'm honestly one of those people who are happy to see that my money is going beyond just give me interest rate, but, it's helping raise blood, building, helping people who are unable, So I think, to me, if you look at the fund all around, beyond even just the numbers, it is a great fund. And to me, it's no wonder that people are trusting it with their money, because they think the NSSF of today is a greater NSSF than it used to be like 10 years ago. And on the basis of that, like we love to talk about in terms of reputation, which is about looking at your past and the present and using that to judge the future. I think, barring anything else happening bad, I really see around 10% plus or minus 1.
Ruth, you're laughing. You think that's too much?
So I think the story of this year for NSSF, of course, is resilience. To be able to be resilient in the market, right? That you're able to deliver growth in numbers, real-time numbers.
It sounds like you're about to tell us you're going to take 1%.
But like growth in members, not just members, but new members, member contributions, and like the numbers are stunning, right? But you also have to think about the future, right? The next few years. So are they going to pay you anything above 12%? I don't think so.
So yours is 12.
12.
Really?
Like happy.
You guys are so unoptimistic.
No, I am. I'll announce it the same way the central bank announces the CBR. I think it will be 10 with a plus or minus 2. So that leaves room for 8%, also leaves room for 13%. I know that many of the ministry officials are now new into their jobs. I know when a meeting about the announcing of interest rate, it will excite them that the fund is performing well. But knowing the way that the boardroom at NSSF is structured, I doubt that they will gun for more. So maybe 10 with a plus or minus 2 is a good.
It's good for you.
Yeah, it's good.
But just one more thing before we wind up. NSSF has committed a few years ago that it will always pay at least 2 percentage points above the 10-year moving average. Yeah. The managing director, Richard Byarugaba, told us the moving average is now about 5.4%. So these guys are shooting very low figures. I mean, so 2 percentage points over 5.4 is 7.4%. I would not be amused.
Yeah, I think
they need to be more ambitious. I think
given
NSSF is lowballing us. It can do better.
Obviously, I agree it can do much better, but you also have to understand it has been constrained by the law. Yeah, so I only hope this time around, once it is freed up, we should be seeing much, much better numbers, because there can't be nothing like we can do X, Y, and Z. So there's going to be a lot of leverage to play. So, and also the other thing, by the way, we need to give it up. We need to cut them some bit of slack, because at the end of the day, this is the money that almost the entire country has in savings. Yes, whereas it's good to be a little bit risky and shoot, let's not try to be like these other smaller funds, because it could be excited. They could make 14 because, they have about 1,000 or so people. But you see, if you keep about money of 2 million people, you have to balance risk and return. And you can easily top a nation if you came to too excited. So I think, to me, it's good to have a moderate level of risk appetite, and also be a little bit don't be over too ambitious. So I think, to me, what you call lowballing is not exactly that. I think people are trying to be mindful of. This is all we have in savings. So if we get over excited and we carry all this money and put it into some new venture that has come up and is very exciting, we could actually mess up the entire fund.
But the money is not going anywhere. For me, every year I see the money comes, but I don't get touched. It's still in the fund. The fund still works the money. So even if they give us 15%, it's okay. We'll all be happy, and they make more money.
I think honestly,
They're
right now,
lowballing us.
I don't
Should
think they're
ask more of
lowballing
them.
us. I think, and again,
We're giving Richard a free pass just to relax
well, not
in his
really.
office
You are giving
on the
it.
12th floor.
And again, we still come back to the times that we are in. We are still in a pandemic. Inoculation rates are still, under 5%, and you have to work to get. They have to work with the risk of what the economy will be like in and out of Uganda, right?
And the pandemic might continue and its
Thank you.
effects into
So
next year. This year or next year,
you
we'll
have to
be
think
talking
about
about it.
what do I have in my purse? How can I invest that wisely to make sure everyone has a return, but also the return that I give, is it reflective of the amount I have made, right? So I think why I'm saying 12%, it's like reflective of you guys have made some money, but have some.
You're saying 12% because you have time.
Actually, a quick,
I don't. I want simple money. Quickly.
Is it actually, a quick one? Also, the other option would be to say, if I had this money and I put it elsewhere, what else is the market giving? Look at the CBR rate; it's at 7%. Look at the 364 TB; it's about an average of about 8-9%. And look at if I put this
Fixed
into
deposits, less than 10.
Fixed deposits, 6-12 months. I checked a few minutes ago before I came on air. It was about 8%. So actually, that's where the market is now. Unless we want this guy to go into money lending and that kind of thing, which is very risky and gives about 15 or 20%, but there's also a risk of whatever. So I think to me, on average, if the private sector out there is what is giving us, I think really it's
Save us, Raymond. These guys are lack of optimism here.
There's two other factors that haven't been mentioned that I think that anyone would be taking care about. Government, which is the biggest borrower from the fund, isn't going to find alternative sources of money in the coming 2 years. So it's important that they see money in the fund. So I don't think that they would be advocating also for higher interest rate payout. But also, I think the other more important thing is if you paid out more now, it would mean you have to pay out more the next year.
No, not necessarily.
Not necessarily,
But
left.
So now you can start go back to your low bowling.
To reflect a healthy fund, you have to pay out more. And already, if an amendment happens on the Act, as we are foreseeing now, you're likely going to have more members in the coming financial year. So do you want to pay out 14 now and pay out 7 next year and then have bad press?
It has happened before.
And then have bad press? Or do you want to pay out 11 now and maintain a healthy growth and also still lend to your key lender who is government? Yeah.
But maybe just one last thing. I think, yes, last thing, yeah. I think we, being a government institution, I think we like playing a lot of, being on the safe side. Probably and this is something maybe the lawmakers can consider, you've heard of the sandbox, arrangement, where people are allowed to make mistakes within a certain controlled, environment. I'm imagining, I mean, we always complain about SMEs that don't have money, yet actually the SMEs don't have the actual structures that, NSSF is looking to invest in. Maybe the fund should be allowed to get like 100 billion, put it in a place where they're allowed to make mistakes, high risk, but maybe also high potential benefit. And then we see how it plays there. Because you never know, there could be, we are fixing ourselves in the known space, and yet we know all the richest people around the world, they made money by going into the world of the unknown. So probably that's something that I would be happy as a member to see a small portion of my money being put in a place where they are playing with a lot of risk, but it's controlled risk. Yeah. So I wouldn't mind that in terms of innovation.
I don't agree, but anyway, thank you. Thank you, ladies and gentlemen, for being with me on Side Talk. Chamtetera Muhereza, Ruth Adong, and Raymond Mujuni. Been Paul Busharizi. This has been Side Talk, discussing the financial year 2021 for NSSF. Thank you.
Now we can talk about the side talk.
Join us for the 9th Virtual Annual Members Meeting happening 29th September 2021, starting at 9 a.m. live on TV and online.
NSSF, a better life.